Thanks for checking out this week's FinPrep Trading and Investment video newsletter. Starting here with the munis here, right? 4 touch on this primary trend line stretching back to '08 where we had a decent pop off it in 2011, as well as 2 touches, but certainly the second did hold in 2013, and here we are, 2016. Similar circumstance in terms of being along this trend line, which is currently holding. And the key piece of here that wanted to call out is basically unprecedented volume on up weeks. So although we did have exponential rising and seemingly capitulative volume in the sell-off right in that trend line there at approximately 106, the buying volume or up volume on up weeks rather, has been essentially in excess of that. So quite substantial. Recapture this 20 DMA overbought on the ultra fast stochastic in the short term, but it does quite suggest that this 107 level may well hold in future, and if not, considerable amount of interest could partake. But looking as munis as a potential harbinger for a bullish scenario for bonds going forward. In terms of SPY, potential consolidation in a bullish fashion, currently holding above the 9 EMA. Any Tuesday morning gap up or early week gap up with a hold and a run would be nice to see to run to new all-time highs. But clearly any break of sort of this 224 level calls 224 itself into question in terms of the 20 DMA, and 222 as a potential target for any sort of recalibration. Although we are in oversold conditions on the ultra fast stochastic and on the fast stochastic at a similar level, which produced a bounce in prior weeks. It remains to be seen if we'll see that this week. Still overbought on our fast weekly stochastic. So looking to see what happens here in the week ahead to see how we close out 2016. But nice little pennant formation triangle, as you could basically see here on the Dow DIA tracking ETF. So very well could see it again. A takeout at 200 would be very interesting. And then Nasdaq QQQ again, about 1, 2, 3, 4, 5 approximate touches along that 120 level. Not quite proper breakout per se in terms of standard 3%, etc. But nice little pennant consolidation, arguably above point of breakout. So any further upside, particularly gap out above this range, would be helpful for those long QQQ. Are looking to get long potentially. Trannies did have nice follow through a bit first 2 days a week, but then carving out again what still remains a possible bull flag. What calls this potentially into question here is a potential bearish crossover here of the 9 EMA above and in through that 20 DMA, and we'll look at what happened on the copper chart. So of course price actually is what defines these moving averages, but in effect wouldn't want to necessarily see a crossover in a bearish fashion if one was looking to get long trannies. So TLT basically still sliding here along the 116, and again slightly overbought here, so potential for a pullback, but just well oversold on the weekly basis. Took a bit of a lag, but well oversold on a weekly basis in through that 116 level, and again our third primary touch along a very critical juncture of this pretty long price channel, stretching back to if we consider resist or support 2011. So nothing to quite sniff at, and may very well produce, particularly if this could base out for an extended period of time and price take out this 20 DMA on a sustainable basis. It would run very contrary to consensus, which is interesting. So most folks arguably are being told of rising rates, Fed to hike, Trumpflation, etc., etc. But wouldn't it be interesting to again see the beginning of a year where rates actually fall? And given how far off we've fallen, off this 143 approximate level at the top of this formation, it just what a classic setup for running counter to folks' expectation. So definitely looking out for a bond potential rally at the beginning of next year as a possible surprise. All right, so dollar consolidating above this 26.50 level, and again stretching back to '09. So very strong action out of the dollar, working off some of its overbought conditions. So correspondingly, gold just treading water, but still losing that trend line, which capped multiple bear market rallies. So a pretty significant level to have lost. And bearing in mind the gold seasonality there within the bear market, beginning of year tends to produce quite a considerable rally. Would really need to see some signs of life, but surprises may come. We'll see what happens. Silver holding this, remember, similar to our GDXJ chart, basically our fourth touch here, a few little breakdowns through it, and oversold, needless to say, along it. So if we flip to our gold to silver ratio, it's at a very critical juncture here at your 20 DMA, basically at 71. So as this price, or the relative price between gold and silver on a futures basis, decreases, it basically indicates silver outperforming. In this case, having the key piece here is just that once the ratio broke through that 20 DMA or 200 daily moving average, the red line, you can see it's come back to retest it on multiple occasions and produce downdraft. So here we are, approximately the third primary touch of that pierce mid-year, and should silver then react as it has, we would expect outperformance with regard to price relative to gold. So could well be setting up for a pretty positive price development in terms of a long here on SLV, but we hold nothing out, particularly given that dollar is breaking out of its trading range, stretching back to many, many years. So considerable strength, and that may very well persist, which would undermine sort of a scenario of silver breaking out. But again, looking at copper, again, when we have that 9 EMA crossing over the 200 or the 20-day moving average in a bearish fashion, could be quite negative. Would really want to see copper here hold the 50-day moving average at approximately 28 for a potential recapture of this trend line, which marked its bear market, basically its two peaks, stretching off the lows in 09, and this very extended bear market. So if this is not to be simply a fake out, would definitely want to see copper hold 28 here. And finally, the British pound. Couldn't stop a week without speaking about the British pound. Pretty clean chart, so did lose that 50-day moving average and slipped basically all week into the oversold condition on a daily basis. On a weekly basis on the fast stochastics, you're essentially neutral to slightly oversold. So a retest of 118 may still be in order. Perhaps it needs a bit of time to recover some of that lost momentum. And flash crash lows are, I believe, a few points below these lows. So the downside is currently playing out in FXB, British Pound Tracking ETF, and further may ensue, although it may take a bit of time. So that's what we're looking at, guys. All right, hope you had a good Christmas. Take care.